Hi, traders. Welcome to the end of day market recap. This is Christian from Market Trade Group, and today is Wednesday, January 5th. Well, really big move in the last 2 hours. The catalyst for the day was the Fed minutes that were released, and this is data that is back from December 15th. But I guess there were some new things that came out in the Fed minutes just about how quickly that they're looking to raise interest rates, and the consensus of all the Fed speakers, all the Fed governors that are looking to raise interest rates. So that was a little bit, I guess, startling, and the market didn't take to it. Kind of interesting that the technical level in the S&P was basically right there, and I even tweeted this out. Again, I didn't make any market call or anything like that. In fact, we had a webinar last night, member webinar last night, talking about looking ahead for this year and lessons from last year. And we talked about being super disciplined has really kind of helped with this market. We went over a lot of charts in the high growth that are basically broken. And then if we kind of look at the S&P chart, which I'll mention, which is, if we want to look at the 1 hour chart, we kind of got into this week, going back and forth here, testing both sides. And what do you notice about the value area for this week? Right, super slim. Right, somebody asked me about this earlier in the week because I made mention. I said, watch these super slim value areas, whether it's if you're on the 1 hour time frame, which I use to kind of look for shorter term moves, and when we're going to break a level, either up or to the downside. And but notice this, how thin this value area is. So it's almost like people like to say a lot with the moving averages coiled, when you have like three moving averages wrapped around one another. You had that kind of that situation for going into this week with with the volume profile set up as it was. So so here's where we were kind of right around at the end of 1 o'clock, and I tweeted out, I said, hey, we're kind of hanging by a thread here. And there was almost like a little bit of optimism here, because we held, and again, this is the 1 hour bar, so each one of these bars is the 1 hour, is a 1 hour candle, but this candle closed inside value. So I said, okay, maybe we got a kick save going on here. And the initial move off of those headlines was a little bit higher, and then once we broke, it was good night, and really kind of showed its form there. And that was the other thing that I said too. And again, I didn't trade this well at all. I kind of screwed this up a little bit, in multiple spots. And I'll show you my trade blotter as well. But I said, hey, we kind of came in here and we broke value. We kind of retested in here around 130. So it's funny that, you kind of look at the headlines and what we said with the Fed and so forth, but it kind of was setting up this. It wasn't setting up in a good way into the release of the Fed minutes, right? And if you look at what I kind of said here, little bounce, the retest of the 5-minute value, and it looks like it looks like a failure, right? Now, again, I wasn't expecting a failure of this magnitude, but it just, when you see this, and that's how you can use the value areas. And again, I'm not trying to give any lessons here, but when you break a level and come up and retest, and then you can't get back into where you were, often it is a move down. Now, again, this was extreme because the way that the market interpreted the data, but and I did say, I'm like, this level is important, right? 4766. So I screwed this up pretty badly, because I did buy. I told myself I would buy some puts in here, and I reported them late in the trading room, and then I thought we might actually see a little bit of a bounce with interest rates doing what they were doing, and clearly we did not see a bounce. So I would have been much better off, clearly, hindsight 2020, if I kept the S&P puts on. But yeah, so that's the main action. And when you have this type of a move, you notice that I didn't even really get to talk about sectors or anything like that. This was a broad sell-off, right? And when you have a broad sell-off, the first half of the day was kind of a little bit different in terms of, those value areas really outperforming once again. One of the things that we said too, I did say this in the midday video, it was long Nucor into today, which was a nice trade, but I said, you got to take profits in some of these things. But look at this, movers, 400 decliners versus 100 up moves. The NASDAQ 2356, and there was really the pressure. We'll get to the NASDAQ, but this was one ETF that I tweeted out earlier, and I said it was the hockey stick pattern, right? So what's the hockey stick pattern is the shape of a hockey stick, where you've got, and again, this is, it's not exactly like, the end of the hockey stick, but this is the, the handle of the hockey stick, and value names, right? And I thought Michael Santoli on CNBC said it fairly well, is that the value trade, the move into, and the rotation into value, there's only and I'm paraphrasing a little bit, but I kind of know what he was getting at. The growth area of the market, right? When you look at the S&P, is a much bigger portion than the value is. So eventually, you can, well, let me say this, let me start over. You could have the value names outperform like you have over the last couple of days, but eventually it can't just be more and more money being taken out of growth and going into the value, because value will get overbought like this, and you need to go into other places of the market, so where else was this going to go to? And you could see it actually finish down lower for the day after a big move higher. So yeah, I mean, even the things that were working really well that we kind of talked about briefly in yesterday's video, the Caterpillar, which still finished positive for the day, the Deere, which I took my profits in a trade, again, the valuer is giving you a nice level. I said all along, I said pre-market, I said my target's going to be 380 and I'm out on this thing, right? So I did take my profits in here at 380, right? So again, the market web's giving you a nice roadmap of how to kind of do that, right? At a previous high area of volume, right? From this volume profile that had not been revisited. Okay. All right. So that's that. Where did Nucor finish for the day? 122. But this was tricky the last couple of days with this Nucor, right? It had tried to go a couple of days. I mentioned that I stayed in it. I was frustrated. I think I talked about that in the video, not yesterday, but the day before. I said, well, I'm staying in it for now. It's not a sell signal. It's just an ugly candle, which was here. So we got the nice pop, and I sold into that, which was probably my best trade of the day. But yeah, so let's go back. We talked about the S&P, and just to give you some levels in the S&P, I would watch this top of value, right? So do I not have labels on here? I probably don't, because it takes up a lot of screen space, but I'll turn labels on here so that you can see what I'm referring to. But I would watch this 4708, and I would be cognizant that this is not a good looking pattern. So what we had said in last night's webinar, talking about specifically the growth names, is to try to get out of the way of them. Now, there's just really not much that you can hang your hat on here. Could we be due for a little bit of a bounce? We could, but I personally would be selling into a bounce now that we've broken support for the week, right? So if we march back up here to 47.23, I would be a seller. Right, I would not look for a full recovery, because I think that we could be visiting some of these things down here. All right. So again, it's the picture changes, and making adjustments definitely helps as we go through here. But yeah, 4708 on the daily chart, that's an important level. And then maybe we come in here and retest the 50-day moving average in the S&P. All right. I just don't know what's going to cause people to kind of come in and start buying this dip. We do have a Fed meeting. We're going to have earnings at the end of the month. So yeah, I'm kind of a little bit, don't like how this thing kind of finished for the day and how this thing developed. Because what concerns me here is, referring to the price action, is that no one seems to want to buy the dip, right? In terms of the institutions, we did actually, in terms of what I saw in terms of option flow, was heavy index put buying, and I kept on throwing those orders in the room, just saying, hey, there's a $3 million Q put order, there's a $2 million SPY put order. At the end of the day, because index options trade till 4:15, we saw some heavy IWM put buying. So it looks like the institutions are kind of positioning either for a move lower or hedging out their positions at this point. Qs, on the bright side, I can't really come up with a bright side for this, but 15,472 would be the level to watch here. But again, I don't know if you can really hang your hat on anything positive with. So again, sorry to be so negative, but I'm just telling you what I see, and the fact that no one wanted to buy the dip at the at the end of the day, or was thinking that it was an overreaction in terms of the price action. It seems like what we saw on the tape is the don't fight the Fed. Hey, the Fed really wants to tighten. Let's not mess with that, right? And that phrase comes into play all the time. All right, let's look at the small cap. So again, 1 hour VPOC takeout, and just, normally under normal circumstances, you would see a bounce here, right? We didn't. All right, so last one in terms of the indices, IWM did take out this, big move down here, 3.4% down here, and we're down to the second venom. So this would be a logical place for this to bounce, right, on that 1 hour chart, right? We're into the point of control here, but I don't like this. I've said for a while now, I don't like this IWM chart. And if it's starting to lean back to the downside, I would be worried about an eventual break of trend. So again, I'm not, I'm just basically saying, hey, how this thing finished for the day. And it's too early to, in my opinion, it's too early to buy the dip. It's too early to make any other conclusions without more price action until we see more price action. Here's the bonds, right? They were down again. This is the one thing that I thought needed to kind of take place. This was something that, again, we talked about in the pre-market session, that there was these virgin point of controls, right? The market remembers this and wants to return to some of these things, right? Right, so this is from all the way back in here, right? And we did take out this last one on the 1 hour time frame, so we could see a bounce here in bonds, and that means that a little bit of a move lower in yields. I think that would be very good, right, for the Qs and for some of these high growth areas. All right, let's go to the next area. So I didn't spend much time here. Other than high growth decimated. Big move up in the VIX close to a 20 at this point, right? We can look at that chart too. I would have, if we didn't get that volatility, I would have talked about all the positives that we saw in things like the steel names and the metals and mining, but clearly that was erased in the last 2 hours. So we talked about bonds. Let me talk about Ark for a minute, right? So this down 7%, right? And I think that what you can conclude at this point, and I will take off the labels here so that you could see the price, right? This is going to be studied for a while after this, right? And the way that this fund, it's a transparent fund, so you get to see what they're doing, right? I've been critical of them for a while in terms of, once I started to see what they were doing in their end of day file, in terms of how they're trading, when they just are continuously adding continuously selling their winners and adding to their losers. The problem is if the losers continue to trend lower, you're going to have a major situation on your hands, and I think that is coming to a head at this point. Right, the continuously adding to names that are getting worse and worse and worse, I think has really impacted what they're doing, and it also just reaffirms, my strategy of trend trading. Right, clearly Ark is not a trend trader, and I think trend trading has worked for a lot of traders, meaning that once things start to break down, you get out of the way. You take your lumps and you wait for price action to kind of recover and look a bit better. Continuously adding to names that are just falling apart, you now see that you've got a pretty decent break. This is on the weekly chart, right? And we did open up below value, but this is just, a classic, just reading a chart. Here was your support level, right? Top of value for last year. We sliced through that, back in November, had a little bit of a move back, and there we are. So on the weekly chart, where could this be going? And the reason why I bring this up is because I think this is still shortable. The trend is down in this group, and it could go, in my opinion, a lot lower. 79, so if we come back and we retest this bottom of value, right? So you got your break, just like we looked at with the S&P chart. You got your break of value, right? Now, maybe, if you don't want to chase a move down 7%, I don't blame you. But you could look for a retest, right? And then maybe you could look for this VPOC down here at about $80. So I think that's kind of in the cards for this group of stocks. All right, can I say anything positive in this video? What could I say that's positive? Other than the VPOC being taken out? But okay, here's a positive for the day. It's January 5th, right? The year has just started. Take it easy. Keep it in stride. Even if you've had a really nasty or wicked start to the year, don't back yourself in a corner. Right? There's still a lot of month left. We just started this year. So one of the positives that I said, I think it was either yesterday, sometimes I mix up my days, but I think it was yesterday. I said, let some of these high growth names, let them come to you. Don't get, in my opinion, again, this video is for information purposes only. I'm not giving out any advice or recommendations, but if you can get out of the way of these things and let them go down, right, without being involved in many of them, you could kind of observe and look objectively, and maybe you will find some good buying opportunities once the dust settles. But I think it's too early, right, to be looking at this. Nvidia does not look good now on the charts. If it doesn't hold this level, notice that it broke the value area. We had this little bit of a move back in here, but we really couldn't get too much further in this. Right, AMD is another one that doesn't look very healthy right now. It did break the 50-day moving average. Also notice here, you have from a technical standpoint, you have a lower high here. You have another lower high, right? That is not strength, that is weakness. Okay, so again, I don't mean to be less than, I usually try to have what's known as a glass half full view, but I don't like this price action. It is only one day. One day is not a trend. But if we start to kind of break further, we could see a lot more technical damage, in my opinion. All right, guys, I'll leave it there. Again, I think the positive is that we're just in the beginning of the year, right? If you can get out of the way of some of this stuff, you could get rewarded either later in the month, later in the year. But you got to kind of try to, in my opinion, try to sit tight a little bit and let some of the price action do its thing. All right, guys, have a great night. See you tomorrow.